Hey everyone, welcome back. FinTech here, and today we're going to be reviewing my now just over $120,000 stock portfolio. In this video, I will first be reviewing all the stocks that I hold in my Roth IRA account with Vanguard, and then I'm going to move on to looking at my taxable brokerage account with Charles Schwab. I will also do a quick summary of each of the companies whose stocks I hold, why I hold those, and then also talk about any trades that I've made in or out of different stock positions during the last 30 days. None of what I say today is financial advice or stock recommendations. I'm literally just going to be talking about what I've done and explaining why I did it. With that said, let's just dive right into my portfolio. First off, let's look at Vanguard, where you can see that I currently have $68,700 invested. Now that's down a little bit from my positions last month, mostly because of big drops in my two largest positions in Datadog and Crowdstrike. Now before I dive too deep into the details on this Vanguard account, I'm going to ask you to please hit the like button and consider subscribing. Almost 92% of the people currently watching this video aren't subscribed, and as a smaller growing channel, I could really use your support. Okay, back to Vanguard. So the account that we're looking at in Vanguard right now is held in what's known as a Roth IRA account. This is a tax-advantaged account, meaning that I don't have to worry about taxes on any trades that I make. You're allowed to contribute up to a maximum of $6,000 to a Roth IRA account every year, and I try to hit that maximum every year. And whether you're investing in individual stocks or an ETF, this would be a good option if you're not using it to save a ton of money on taxes. So I actually made some changes to this account last month, and I'm down to now only 4 stock positions held in my Roth IRA. Those 4 companies are Okta, Crowdstrike, Datadog, and Cloudflare. Now before I look at exactly how much money each of these different positions have made me, I want to go over what each of these companies do. First off, we have Crowdstrike, which provides endpoint security protection. Basically any type of endpoint that a large enterprise might need protected, they could use Crowdstrike for. Now this has experienced a huge surge in growth with the number of people working from home and moving applications to the cloud, because there's been a proliferation in the number of endpoints that need protecting. I mentioned this a little bit earlier, but Crowdstrike is one of my 2 largest positions in this account. Next up is Datadog, which sells a software subscription that allows companies to monitor their infrastructure, their security, and their applications all through what they call a single pane of glass. This is a company which has been growing incredibly quickly, incredibly steadily, growing revenues at over 68%. Along with Crowdstrike, this is by far my largest position in this account. After that, we have Cloudflare, which is a company that has huge ambitions of changing the way the internet itself works. Now, Cloudflare got started providing simple services like security and DDoS protection, but they've moved on to other areas, including hosting websites and providing edge computing, which is really important for any kind of computing application that requires millisecond latency, such as real-time credit card transactions or driverless cars. I made a detailed comparison between Cloudflare and a very similar company, Fastly, in an earlier video, and explained why I actually sold out of my entire Fastly position and moved most of that money into Cloudflare this month. For that reason, my Cloudflare position is much larger than it was in previous months. And then the last position I should mention is Okta, which is an identity access management company. They basically provide access to all the different applications that an enterprise might have through a single sign-on service that makes it really easy for employees to get around without wasting time remembering all their different passwords. Okta's been growing revenues at around 43% per year, and they have a customer net retention rate of 121%, which means that for every dollar a customer spends this year, they can expect them to spend $1.21 next year. So let's now dive into looking at each of the 4 positions I do still have. So first off, we have Crowdstrike, which I own 159 shares of for a total of $20,000 invested. Then we have Datadog with $20,500 invested, followed by Cloudflare with just over $14,000. And then my smallest position is Okta with $10,500. Okay, now in this next screen, we can look at what my capital gains have been on each of these different positions. Now, it's a little bit of a weird format because I'm having to use the website version rather than the app because my screen recorder won't record the actual Vanguard app. So now we can look at how much money I've actually made in unrealized gains from each of these different stock positions. Unrealized gains just means that if I were to sell these positions right now, that's how much money I would make. It's called unrealized because the stock price could obviously go up or down in the future, and that would obviously either decrease or increase the amount that I would actually gain once I sold the stocks. So if I scroll over on Cloudflare, for example, you can see that my total cost was $12,000. This is the top row. And then my market value is $4,200, which means that I have a short-term capital gains of just under $2,000. Similarly, if I look at Crowdstrike, which is the second row, we can see that I have a short-term capital gain of $11,700. Now, I only invested $8,500 into the stock in the first place, which means that it has more than doubled my money. And because it's a short-term capital gain, that means that it's doubled my money in less than a year. The next stock we can look at is Datadog, which is the third row in this table. That one has a capital gain of $9,100. And I invested just over $11,000 into that stock, meaning it's not quite double, but it's pretty close. And then last up, we have Okta, which is my smallest position. You can see for that, I have a short-term capital gain of just $100, which means over the last year, that money would have been a lot better deployed into one of the other stocks. But overall, Okta's actually performed decently well. And if I scroll over to look at my long-term capital gain, it's almost $4,000. So a $4,000 gain on a $6,500 investment is still pretty good. So then if I scroll all the way to the right, you can see that my total gain or loss was $26,940.82, which was all on an initial investment of $38,471.74. So that's a pretty good rate of return, especially considering a lot of that return has been in just the past year. One other thing to note is my Cloudflare position, which was the first row of that column. It says that my cost basis is $12,000, but a big reason for that is because I bought a ton of extra Cloudflare stock this month after selling out of Fastly. So next, let's look at my Charles Schwab account. And like I mentioned earlier, this is a taxable brokerage account. This means that any trades I make inside this account will be taxed based on any profit I make. This generally results in me making fewer transactions in this account because I want to avoid getting hit with short-term capital gains taxes for making too many trades. Now, in case you don't know, anytime you sell a stock position at a profit and you've held that position for less than 1 year, that profit is taxed at what's called a short-term capital gains rate. This tax rate matches whatever your income tax is for the year. If, however, you hold onto your shares for at least a year, you're taxed on long-term capital gains, which are taxed at a much lower rate than short-term, with a tax rate of 0% up to the first $40,000, 15% up to around $440,000, and then 20% above that. Now, these rates change every year, so if you're watching this in the future, these may no longer apply, but at least as of right now, they're substantially lower than the short-term rates, which means it's advantageous not to trade in and out of positions too often and to hold for at least a year. Now, in this account, the same as last month, I had 5 stock positions. Those were Alteryx, Cloudflare, Crowdstrike, Datadog, and Zoom. Alteryx is a relatively small position of around $1,100. Cloudflare is a little bit larger at around $1,850. CrowdStrike is my first of my actual full-size positions at around $6,500. Then you have Datadog at just over $7,000, about $7,250. And then Zoom is a huge position at $36,000. Now, the reason for the disparity in those stock prices is partly because I put more money into the higher conviction stocks, but also partly because some of those stocks have just grown that large in the first place. And to show you that, I'm going to click on the gain and loss tab on this site. You can see here, we're seeing basically the same screen with the 5 different stocks and the market value listed on the right side. But under that market value is either green or red text, which shows how much money I've made or lost in each of these positions. So you can see for Alteryx right here, I've made about $100. For Cloudflare, on the other hand, I'm down around $270. Because that's such a small amount up or down, it's really not a big deal to me. I basically consider those as flat. But then we move on to CrowdStrike, which is up $3,000. Now you can see that I only have a $6,500 position, which means that CrowdStrike has almost doubled from where it was when I first invested the money. Similarly, Datadog is up $3,600, which is actually more than double the amount of money that I originally put in. And then finally, you have Zoom, which has performed incredibly well, going up from the initial $12,000 that I put in and making me $24,000 on top of that, which is a 200% return. So that's the reason that Zoom is such a large position. It's just grown that large over time. It isn't because I've dumped a ton of money into Zoom, even though it was my largest investment overall. Now for this account, the only change that I made this month is I bought 35 shares of Cloudflare for a price of just over $2,000. So for those of you keeping track at home and trying to add up what my total gains were, don't worry because Charles Schwab has you covered there. They have this view in the full website version where they'll actually look at all the different positions you have in any of the external accounts that you link, and then it'll add up your different capital gains and losses in each individual position across all your different accounts. So you can see that for Alteryx, I have a net gain of around $99. For Cloudflare, I've made around $1,400. For CrowdStrike, I've made around $14,000. And then for Datadog, I've made $12,400. And then below that are Okta and Zoom, which are only held in one account, but those have made $3,700 and around $24,500 respectively. Now note that even though I'm still up massively for the entire year, I'm actually down a little bit this month. Back at the end of September, I had $128,761.77 in my accounts. Now, as you can see here, I only have a value of $121,798.36 invested, meaning that I've lost around $7,000 since last month. This loss is only around a 6% drop, which is pretty small compared to the amount that it's gone up this year, but it's also the most substantial drop that I've had in my portfolio in the last year. Now, I don't plan to make any changes to my portfolio in the short term. Even though my stocks are down more in October than they have been in any other month in the entire year, I'm not going to get overly emotional and panic because that's just what the market does. It goes up and it goes down. To put things in perspective, I'm still well above where I was at the start of September just 2 months ago. And I'm still close to doubling my money for the year in total. Some months, the best thing to do is to do nothing. So that's pretty much it. Let me know if you invest in any of these same companies, and if you do, what moves you have made this month. I'm pretty curious if you've seen the same sort of drop in your portfolio that I have, or if you've matched more like the S&P 500 and basically been flat for the month. Let me know in the comments. With that said, I hope you enjoyed this video. If you did, make sure to leave a like. And if you've gotten this far in the video, I hope you consider subscribing so you don't miss out on any of my future videos. I'll see you next time.